Welcome to Financial Habits. In this video we are going to talk about crypto and stock crashing. So before starting this video, like this video, and subscribe to Financial Habits for future updates. After a jittery session on Wall Street, where cryptocurrencies collapsed, and a whisper of tapering talk from the US Federal Reserve drove bond market selling and raised the safe haven dollar, stock markets struggled to gain traction on Thursday. In morning trade, South Korean KS11 and Japanese N225 benchmarks were both flat, while Hong Kong's Hang Seng HSI fell about 0.8%, pulling MSCI's broadest index of Asia-Pacific shares outside Japan. MIAPJ0000PUS down by 0.2%. Bitcoin, which had dropped as low as $30,000 overnight, was clinging to help about $36,000. Stock futures in the United States wobbled well below flat. Commodities were also down, treasuries were down, and the dollar was up overnight. According to Fed minutes released on Wednesday, a number of officials thought it would be reasonable to begin discussing a strategy for changing the speed of asset purchases if the recovery held up. Find out more. This is very much the market view, economist Rob Carnell said over the phone from Singapore, with traders anticipating strong signals over the summer that the taper is on the way and that policy support will begin to wane in December. This is taking us to where we think we're going to go, and maybe this eliminates some of the doubt around that, so you get a small rise in bond yields and a slight rally in the dollar. The yield on the benchmark 10-year US Treasury note rose 4.1 basis points overnight to 1.6830%, before falling to 1.6676% in early Tokyo trade. The dollar has recovered from a 4-month low to trade at $1.2183 per euro. The dollar also surpassed its 20-day moving average against the yen, Australian dollar, and New Zealand dollar. The dollar index was last at 90.149, and it bought 109 yen and 17 sen. On Wall Street, the S&P 500 SPX fell 0.3% overnight, while the Nasdaq IXIC remained unchanged, marking a partial rebound, after both fell more than 1.6% during the day. The step by China on Tuesday to tighten crypto trading restrictions by prohibiting financial institutions from offering transaction services appeared to be the catalyst for sharp drops in Bitcoin, Ether, and other cryptocurrencies. Find out more. Traders believe gravity, as well as Tesla CEO Elon Musk's apparent cooling on Bitcoin, over the amount of energy consumed in transaction processing, played a role in the asset class's recent price surge. Find out more. Outages at a number of major trading platforms during the storm, which sent Ether down nearly 50%, did nothing to inspire trust. On Thursday, Ether and Bitcoin remained under pressure despite being well above overnight lows. It's not just crypto, though it is the poster child of this trend, but SPAC's recent IPOs, Arc Innovation, and Tesla, to name a few, have all lost their offer, Chris Weston, head of research at Melbourne brokerage Pepperstone, said. Liquidity, and the timing of lower liquidity, is the overriding consideration for me, and it's having major repercussions. We're discussing, not only a slower rate of central bank asset purchases, QE, but when QE ends. In other markets, industrial commodities dropped sharply on Thursday after China announced that it would improve its supply and demand management to rein in excessive price increases. Find out more. Early trading in Dalian saw iron ore futures fall 7%, and coal futures fall 8%, triggering a downside cap. Crude oil recovered from overnight lows, but remained under pressure due to concerns about new COVID-19 curbs in Asia stifling demand, and the outlook for US interest rates. Brent crude was unchanged at $66.70 a barrel, while US crude was at $63.29. Bitcoin dropped dramatically on Wednesday. Investors and industry experts told MarketWatch that the drop was an extension of a downtrend in the world's one crypto that had started over the previous 10 days or so. Bitcoin prices BTC USD 4.25% were changing hands at $38,732.56 on CoinDesk at the time of writing, which is quite a feat considering it hit a session low of $30,201.96 before bouncing back. Ether ETH/USD, 4.78% on the Ethereum blockchain, was down 22% at $2,608.84 after hitting an intraday low of $1,902.08, and Dogecoin doge/USD, 1.36% was down 25% at 35.8 cents. When Bitcoin sneezes, the rest of the crypto complex catches a cough, because the dominant digital asset has gradually become a gauge of sentiment not only in non-traditional markets, but also as a measure of risk aversion in general. What is causing the Bitcoin price to plummet? It's not even close to being a crash. Bitcoin is dropping in value, but it is a volatile commodity. Its current slump can't be attributed to a single event or piece of news, but rather to fear, confusion, and doubt, or FUD, as crypto traders call it. Fears were focused, at least in part, on China's digital asset strategy. According to reports, the People's Republic was cracking down on the use of digital properties. Such findings aren't new to seasoned crypto investors. Meanwhile, crypto enthusiast Elon Musk's bearish tweets have been blamed for the crypto complex's demise. Musk announced earlier this month that Bitcoin will no longer be accepted as a form of payment at Tesla TSLA, minus 2.49% before the cryptocurrency becomes more environmentally friendly. Musk was one of the main factors for the uptrend in crypto in general, with his tweets supporting the uptrend in meme coin Dogecoin and Bitcoin. Separately, JP Morgan Chase & Co. JPM, 0.76% analysts, including Nicolaus Panagurtzoglou, argue that Bitcoin investors are turning to gold futures GC00, minus 0.34%, which have been steadily increasing in recent trading. They wrote, institutional investors tend to be moving away from Bitcoin and toward conventional gold. Market participants told MarketWatch that the use of leverage, which was pushing margin calls at some crypto trading platforms, exacerbated Wednesday's losses. Complicating matters, some crypto trading sites, such as Coinbase Global Coin, minus 5.94%, suffered outages, which tended to help keep rates under control. Coinbase's trading issues, according to a spokesperson, have since been fixed. Can the price of Bitcoin recover? Bitcoin and other cryptocurrencies are potentially risky. According to Bespoke Investment Group, the average drawdown from a record high is close to 50%, and Bitcoin has been down more than 40% from its record high on 69% of all trading days over the past decade. Bullish investors, on the other hand, are advising long-term investors to stick it out, or reconsider their original investment thesis before selling their crypto assets. According to Dow Jones market data, Bitcoin has seen more than 750 instances of daily price changes of 5% or greater, more than 230 instances of daily price changes of at least 10%, and nearly 50 instances of daily price changes of at least 20% over the last 11 years. Correction is a frequent occurrence in the cryptocurrency sector. In emailed comments, Konstantin Boyko-Romanovsky, CEO and founder of Allnodes, wrote, "It doesn't mean a bear market is underway. To be sure, past success is no guarantee of future outcomes, but it is on this premise that optimistic investors base their arguments for long-term ownership of Bitcoin and its ilk." What do you think about this video? Do let us know down in the comment section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.